But I'd like to thank you all for coming and pass over to Anne, who'll now talk you through the NSX from both a listing and a markets perspective, but also from a capital raising perspective and the placement that's now open. So Anne, over to you. I'll give you that one. If you want to talk to the mic, you can.
Excellent. Okay. All right. So this isn't about investing in NSX. This isn't about investing in a stock exchange. This is about investing in the equity capital markets that you want to see for Australia tomorrow, and in doing so, you enable viable, vibrant equity capital markets for your clients, your businesses, and your future. Today, you have an opportunity to invest in and be part of defining what the equity capital markets of Australia look like for tomorrow by investing in NSX today. We are raising $10 million here today. And the reason we're raising that money is to enable us to further develop and bring to life our projects, our processes, our investments to date around connectivity, distribution, and the underlying credibility of NSX as an alternate listing venue for equity securities here in Australia today. You'll hear from my colleagues today, John Williams, who is our Head of Admissions, and from Matthew Loughnane, who is working with us, bringing years of experience from his experience most recently at E-Trade, following the sale of that business to CMC. So today we'll talk to you about what those strategies are, what we've done in the business to date, why the new NSX is so dramatically different from the old NSX, and why it is a viable alternative to ASX. But first, I think it's really important to be clear about what NSX is. NSX is the only other place you can IPO in Australia. NSX is a Tier 1 stock exchange. NSX is the only place, other than the ASX, where retail shareholders can buy and sell securities. NSX is a market which is underpinned by the market integrity rules of ASIC and underpinned by the sections of the Corporations Act that govern your offer documents, your prospectus, your continuous disclosure, and your periodic disclosure. The integrity of the information that goes to the market is that same as ASX. And ultimately, you will be able to access that same investors by listing on NSX as you can on the ASX. And that is fundamental to our strategy, and it is core to the opportunity around investing in NSX. We are an infrastructure play. We are a platform. We're about connecting investors. In much the same way as a telephone is supported by national infrastructure, right? When you make a call, you don't know whether that call is going out over Telstra, Optus, or Vodafone, and you don't care, nor should you care, because that's backed up by national infrastructure. That means you can call that same person through that same process, irrespective of what infrastructure it's going out via. The same will be the case for equities. There is no reason why it shouldn't be the same. As long as you can reach the same investor on the other end of the trade, i.e. one market, two listing platforms, there is a huge opportunity for NSX in this space. And key to that has been the changes we've made to enable that to happen. One of those steps has been the IRIS project, which we'll talk about in more detail today. So in a snapshot, the NSX today looks like a little over 70 listings, debt and equity securities covering financial services, retail, industrial, tech, quite a diverse mix. The average market cap of our listed company is 35 mil market cap. The average market cap of an IPO coming into the market is around 20 mil, and the average raising is around 2 to 3 mil on the market. You may be aware that we've had companies much larger listed on the exchange, companies that have gone up to 1.5, 2 billion in market cap, that have had very high volume of trading that have gone through that, despite the clunky market access model that we had in place previously. So as a platform, where we choose to market ourselves, i.e. who we target for listings, is one thing. But in terms of the capability of the platform and the infrastructure that underpins it, there is no limit in terms of the size of the company or the volume of trading that we can be putting through. John Williams, our head of admission, will talk to you a bit more about how you list and what our suitability requirements are and what our listing requirements are, and which will give you a better feel about how you bring those listings to market. But in the meantime, I think it's important to talk about our broker profile, our broker community, and I know there are a number of you here today, so thank you very much for coming and thank you for your support over the years. It's a fantastic group of brokers, they're a fantastic broker community, but I will say NSX has not utilised that capacity very well in the past, and there's a very good reason for that, which probably gets me to the liquidity question, right? The biggest criticism of NSX to date, and probably today, until I re-educate you, has been a lack of liquidity in the NSX market. It's important to understand why that is the case, or why that was the case. To access the NSX market before, a broker would get a call from a client and say, hey, I want to put an order into the NSX market. He or she puts down the phone and has to go and find the DTR in the broker who knows how to put an order into the market. When that person comes back from lunch and sits down, he logs into a proprietary interface called Nets and puts the order into the marketplace. Steps back, logs out and goes back to his IRIS terminal and trading ASX securities. You are never going to have any liquidity in a market that you can't access. So we had 2 to 3 people in a broking firm having access to it and having to access the market through a proprietary interface that was unfamiliar and clunky. That is a key reason why there has not been able to be liquidity in NSX until today. The solution to that was really clear. We needed NSX securities to be available in IRIS to be traded in that same way as you trade ASX securities. One market, 2 listing platforms, the same. Fortunately, we're here today having completed that project, and that is a significant step change for NSX. What that means is now not 2 people at a broking firm have access to the NSX marketplace, but the whole advisor base has access to trade NSX securities. So you go from a scenario at Patterson's, at Morgan's, at Bell's, where you had 2 to 3 people who could trade an NSX stock, to an advisor base of 400 plus who now can trade NSX securities in the same way that they trade their ASX securities, in the same screen, in the same search. It's one data set, the Australian listed equity market, 2 platforms. That is a huge change in terms of the behaviour that brokers have in terms of trading NSX, but also the accessibility to market. So 2 changes. 1, you now trade it in the same way. 2, you've rolled it out across your whole advisor base. The third point is IRIS forms a key part of the market infrastructure more broadly. Brokers like Pershing, CommSec, NabTrade are built in some instances entirely off the IRIS platform, and behind them sits an extensive broker community and client base. So for us to approach those brokers, because of course you say, why don't you have online retail brokers on your market? Of course, but what you needed to do was build the infrastructure to enable those participants to join the marketplace, and that's what the last 3 years has been about. Moving the barriers to entry to the marketplace, removing the barriers to trading. And to be honest, when I was at one of the broking houses here talking about what the IRIS project will mean, he turned to me and said, well, that will make me agnostic as to whether or not the security is listed on NSX or ASX. It'll be about investing in the fundamentals of the stock, which of course it should be. So in a nutshell, that's our strategy. But IRIS has just been one component of the rebuild of the NSX. There's no doubt that NSX did a great job at presenting itself as a stock exchange, as an alternative to ASX. Most people in the room have heard of NSX before, which is therefore a tribute to NSX's ability to market itself as being an exchange. But once you got in and looked under the hood, the fundamentals weren't there. I can tell you today, there is not a server, not a chair, there's a single person who remains of the old NSX today. We spent 3 years reviewing our listings, reviewing our listing policies, reviewing our policies around brokers, lifting standards around our technology, redundancy, co-locating at the ALC. An example would be that Thomson Reuters and Bloomberg, whilst they took delayed data from us, and sometimes market announcements. It wasn't real time. You can't run a stock exchange off end-of-day data or 20-minute delayed data. We needed real-time market data, pricing, announcements going through these feeds as a fundamental basis for, to be honest, the online retail brokers to join NSX. So there's been a lot that's happened, which is under the hood, so to speak, to position NSX to take advantage of the opportunity that's coming to bear in the marketplace today. Absolutely key, and I know they sound like light words, but absolutely key to NSX's ability to deliver on this opportunity is our team. And whilst there was a lot of work that went into trying to recruit the right people in the right roles, I am so blown away by the capabilities that we have in this team. We have over 100 years of exchange experience sitting up there, let alone ASIC experience, institutional banking experience, retail broking experience. So having the right people in the right roles with the right tools doing things the right way is fundamental to now being able to deliver on what the opportunity is for NSX. So let's step back a bit and look at what's happening in our peer markets, right? If we look at these markets, the US, UK, Japan, Germany, New Zealand, South Africa, all of them have multiple listing venues, multiple listing platforms. All of them are benefiting from what multiple listing platforms means. Tailored solutions, more opportunities to list, ecosystems developing, creating efficiencies in terms of capital allocation. This is not a new model. 20, 30 years, NASDAQ 40 years, right? Multiple listing venues is something that's been around for a very long time, and some people in the room will remember when Australia had multiple listing venues, right? ASX is a new phenomenon. Having a one-size-fits-all solution is a new phenomenon in this marketplace, and to be honest, I believe that that is detrimental to the progress of our market going forward. The challenge I often get when I talk about this is Australia big enough for 2 listing venues? We have the 4th largest pool of investable funds in the world, sitting behind the US, UK and Japan. $2.7 trillion. You cannot tell me that that's not enough investment dollars to support multiple listing venues. And you can tell me today what the investment opportunities in the market that could be funded if we had a mechanism to enable a more diverse funding model to take place. Absolutely, there's room. There's more than there's room. It's time that we had multiple listing venues in Australia. In fact, I think it's essential. Right. The reason why, in my view, a significant portion, 600 billion of that 2.7 is going offshore, into offshore listed equities, is because we don't have the diversification of investment opportunities here. Because we have the same money going to the same companies through the same gatekeepers getting the same outcomes. Competition means that we need to differentiate. We need to do it better. We need to do it differently. We need to provide a better solution. That differentiation creates more diverse opportunities, and medium term in the outcome we'll see more investment dollars retained here as we grow the pie. Back here, one size fits all. Now, this is a snapshot of where we are today. We have a one size fits all solution to the market, and it's quite clear what that means. That means that people are paying for services they don't use. It means that people are squeezing onto a market that really isn't designed for them anymore. And worse, we have people not listing who would benefit from being listed and from who investors would benefit from listing in. It's a problem. Next, we know ASX is shifting their market focus. For the last 3 years, consistently, their executive team and their board has talked about their focus on 50 to 500 mil market cap companies, on tech companies, on the west coast of the US, on Israel. And you turn and you say, well, what does that leave behind? Right? It leaves behind the sub 50 mil market cap companies and the marketplace that we know underpins the heart of our equity capital markets. Overlay recent communications into the marketplace coming from ASX. And I think you start to feel the shift in priority, the shift in strategy that ASX has, and good on them. They're a listed company. They don't owe, there's no public interest there. They need to follow and pursue the strategies that are best for them. but we need to stand up and look at what that creates in the marketplace and think about what we want for the equity capital markets of tomorrow. So in that 50 to 500 mil space, if you're a director of a company that's received one of those letters, if you're a shareholder of one of those companies that has received a letter from ASX, in all probability, in 12 months' time, you'll be a director of, a shareholder in an unlisted public company. Not a great spot for anybody. We have an alternative. You can fast track your listing or passport your listing from ASX to NSX. Best done whilst you're still trading, not suspended. Very low cost, very fast, very easy. Retain your ticker code. It is a really important piece of information for directors and shareholders to know, looking at the future viability and the future strategy for your companies. NSX has a really important role to play in the marketplace going forward. You guys know 2 out of 3 IPOs take place sub 50 mil market cap, and we know that there's 1,200 companies on ASX sub 50 mil. Don't want to say anything about that except remember that number. It's indicative of what the size of the market opportunity is. Looking more broadly than necessarily ASX listed companies that we would look to passport over, to look at, okay, how do we grow the pie? Where are the listing opportunities beyond companies who are currently considering an IPO today? And I think that's really important to the fundamentals that'll underpin the growth of the NSX. Quite clearly, the family business succession planning. 6 trillion, 9 trillion if you ask the Family Business Planning Association in economic value. 8 out of 10 of those founders want to transition intergenerationally in the next 10 years, and 2 out of 3 will fail. They are a walk-up start for an NSX listing. Typically don't need to raise cash, positive cash flows, businesses, retail investors understand. Typically, pretty close to 50 shareholders. A really key point about our point of difference, we have a minimum of 50 shareholders for our spread requirement. You've got an ESOP plus, half a dozen family members, and you're a walk-up listing for an NSX. And we provide a really important solution. You can then attract new management, you can transition at arm's length valuations, and you can execute new corporate strategies around the future of the business. So we've met with the Family Business Association. They've got 2,200 members, and they're looking to partner with us because they can see the important role that NSX plays in solving the problems of their members going forward. I think lastly from me, it's really important to understand that where the business is now, we've got some really clear levers that we can pull, some of which you guys can directly influence today, but some really clear levers to drive value in this business going forward. Like the hard work, the grunty stuff is behind us, and we're really now business building and looking for opportunities. Building liquidity is a no-brainer. We've got the access to TAS there. We're going to hear from Matt today about what accessing the TAS service from ASX means, how that interplays into online retail brokers and brokers such as Pershing. Attracting listings. This is the value driver for NSX. Number of listings. It is that simple. You drive listings, you drive revenue, you drive value. A tailored market model. No, it's about differentiating. It's about doing it differently. There are opportunities around products such as CPCs, which you might be familiar with from the TSX, which have been incredibly successful in driving market activity in Canada for 20 or 30 years today. Incredibly useful tools that we could look to bring into NSX. And then building alliances. Having got NSX to the position of credibility where we can talk to our peer markets in Canada, in the UK, in Singapore, the opportunity to work with those markets to expand access to new investment pools for our clients, being our listed companies, our broker community and the advisors that sits behind it, is really exciting for NSX from here. On that note, I'll introduce John Williams. John Williams is the Head of Admissions at the NSX. He has been with us for 3 years. He was number 2 in terms of joining the team, and he's been an invaluable member of the team. So John, welcome, and over to you.
Thanks, Anne. Thanks, Anne. So I'm going to talk you through now just some of the points of difference in how NSX approaches listings. A lot of these timelines and these diagrams, you're going to say, that's fine, that's a listing here, that's a listing in Frankfurt, that's a listing in Dubai, that's the timeline. So where does NSX differ? So we look up front here and we think, what do you need to do at times of preparation? NSX has 2 points of difference here. A nominated advisor scheme, which means that advisors like yourselves are recognised by NSX and work with companies from the outset, both up to the point of listing and then ongoing. And that relationship with that nominated advisor and that nominated advisor's relationship with NSX should provide your clients better comfort that their path through listing is one that's got some certainty and some clarity. How has NSX been involved in that? In working closely with our advisors to ensure that they have the most up-to-minute ways of thinking, the thoughts of NSX, receiving communications regarding compliance, to changes with standards, and how feedback from the market is being relayed to future activities or future listings. And secondly, working early on through listing suitability approaches to understand what's appropriate, what needs to be changed, and what needs future consideration as part of a listing should it proceed. And if we look at that, a lot of that happens up front as well. And the key here is to get that often intricate piece of discussion out of the way early so you and your clients can have some clarity and some certainty on the path forward. So rather than waiting to the point where you hear that things have become an issue after an IPO's commenced or after significant funds have been outlined, to note that those issues have been addressed and considered early. This timeline is one you're probably going to say, well, I know that too, that's fine. How do you make sure your listings happen in 12 weeks? And that's through a lot of the partnering up front to have those discussions early and continue to engage early. We're engaging directly with the issuers in some cases. It may be that it's with the investigating accountant. It may be with the lawyers as well as the nominated advisors to help understand and help to educate clients, those issuers and those advisors where there may be things to consider, elements either of a listing proposal or of a structure where they need to be addressed up front. So there is a way forward for them. And so those points aren't dead ends to those opportunities for yourselves. Anne mentioned passporting or fast tracking. That's essentially an opportunity that's been available for a number of years now for existing ASX listed companies to move swiftly and quickly and easily from ASX to NSX or any other recognised exchange, not just here in Australia. And in doing so, utilising a lot of the historical announcements and disclosures in addition to letters of applications and the relevant declarations that form part of the NSX listing rules to passport across. And in doing so, retaining a ticker code, retaining the holdings in CHESS, in the same SRNs or the same HINs, access to the same brokers for the same outcomes, secondary market trading. So breaking that down, and if you look at some cases in point that we're working through at the moment, companies are provided with an option. They can remain suspended on ASX, and they're likely to have an outcome which will result in delisting, or they can choose to start to engage with NSX now, working through those earlier parts of suitability submissions, so we can understand if there are real points of concern that ASX have raised to the company or that have been raised to the market, what's the way forward and a path through those, as well as working through towards a listing application, which happens in a straightforward way. And in doing so, providing those shareholders an active secondary market. Anne's talked about the points before that are the same. Corporate governance, disclosure and requirements of the Corporations Act. They are the same for any disclosing entity and any listed public company in Australia. So those points you can say are the same. Where's the difference? We've talked about spread requirements, the number of shareholders required for NSX listings, the difference between a distinct profit and assets test that you know well through ASX, and where NSX binds those into what's known as 2-year track record. And you'll see on both the NSX listing rules and a lot of the other materials provided, that's the point where a principles-based approach that NSX applies has worked well and continues to work well in working with clients and issuers to see what's an appropriate way through for listings to proceed. So talking through that again, a lot of those other elements are the same. The way that public companies are structured, The expectations and experience of directors and the expectations of management are the same. That's what makes those companies effective and helps those companies present an investable and understandable story to investors. That's what you bring to the listing. The separation from NSX's listing rules is around the eligibility, around spread, around 2-year track record, and around the approach to a market which is focusing on small to medium-sized companies. And you're thinking, well, what about pricing? So NSX's fees are typically a third of those ASX fees. When you look at both the application fee and those annual fees, you can play with the calculator on the website and see how that works, but they're essentially a third of those ASX fees that you note today. A lot of those other fees that exist within a capital raising and corporate sense are the same. Share registry, ASIC lodgement fees, lawyers' fees, accountants' fees. So bear that in mind as well. I'm going to hand over to Matt now. He's going to talk through the future state for connectivity and also just an update regarding the trade acceptance service.
Great, thanks, mate. I'll use this. Thanks, everyone. Few familiar faces in here. You may have seen me around occasionally. For the last 8.5 years, I've been running E-Trade, and then it became ANZ Share Investing and the margin lending book of ANZ. So I'm the latest recruit into the NSX team. It's really exciting to be on board to see a huge personal opportunity and also a company opportunity. What I want to talk to you about is liquidity from a connectivity and distribution capability. And a lot of, as Anne said, a lot of the hard work has already been done. We've got integration into Iris, so advisors can trade the same, but also investors can access the market as well through Iris. And that's a big building block that's already in place. We've co-located to the ALC, so the data centre is robust. The launch of the equity research scheme, so the companies that are listed have got research coverage, critical to companies and to advisors. We've got integration of Thomson Reuters and Bloomberg's, one of the standards that most brokers expect when they're looking for data. It's a huge win to have those two companies integrated into the business. The last piece of this jigsaw, or the building blocks of the NSX, is the trade acceptance service. And I want to spend a little bit of time on that because it is crucial to many of the brokers coming on board, and also for the existing brokers. So at the moment, trade acceptance services, if you're not familiar with it, provides straight-through processing for post-trade orders. So at the moment, there's a bit of a convoluted process for brokers at the moment. There's a manual and post-trade activity. That creates counterparty risk because ASX Clear isn't in the mix. So moving to TAS will remove that counterparty risk and will remove that manual effort that brokers have to go through. And that's a big win for those brokers because it de-risks their business and creates a cost efficiency as well. Huge win for the business, for brokers and for the NSX. Because what we want to move to is a consistent experience. Doesn't matter which exchange you're trading on, the experience for brokers and investors is the same. And introducing TAS delivers that. So as you can see, it's the same experience coming through to CHESS and to ASX Clear and settlement. And ASX Clears takes that risk, that counterparty risk, which brokers want. So where are we at with this process? I know the team spent a lot of time just getting to the approval, to the starting line with ASX, and that happened late last year, the beginning of this year, getting that approval. Huge milestone. We're now into execution. Excuse me. So we're in the process of getting the NSX rules changed and approved by ASX. We're expecting that to come through in the next month, but it's with the ASX. The next stage of that is ASIC approval of those rules. And we can't tell you the time frame of that, but quite far along. We'll go into market consultation. Part of that has already happened. But once we have those rules approved, we can talk with more confidence of what it looks like, which is great. The other element is the technology, the gateway that has to happen, to be put in. So we've appointed securities to do the technology work. So we're running a number of things in parallel to bring this process forward, which is great. And then finally we're ready to go into market. Indicatively, we'd like to have it ready by the end of calendar year, but we're beholden to the ASX and ASIC's approval of the rules. So that's why we can't say exactly when it's going to be delivered, but it's high on the agenda for delivery of key projects. So that's talking about connectivity and normalising the experience for brokers and investors, which was crucial for the NSX. So Ant's talked about some of the great brokers we've got on board already. We've had 3 in the last 12 months. We had Canaccord come on board, FinClear and State One. So there's a great mix of brokers on there, number of full service. But the opportunity is much bigger than that in the distribution. The way we see it, this is the ecosystem of distribution in the market. We've got the full service brokers, we've got the online retail brokers, we've got the platform providers, and we've got the institutions. For us, whilst they're all important, you've got to choose which ones you're chasing after initially, and that's the main reason I'm on board, is the online brokers. Bringing TAS on board makes it easier for those online brokers to come on board, because their whole business model is based on straight-through processing of orders, from front to back, with no manual intervention. So the conversations we're having with CommSec, NABTrade, CMC Markets, ANZ, are going really well because we've got all these building blocks in place. So the conversation's a lot easier. But also, and that gives us access to 750,000 active retail investors. There's over 2 million investors in the country, but actual active traders. Having that iris in place, which CommSec provides to their high-frequency traders, those sorts of capabilities is an enormous opportunity. The other bit is the trading platforms that these groups provide. So think Pershing, the conversations there are well along the way, which is great, gives access to a number of brokers. CommSec Advisory Services supports about 200 advisor groups. CMC supports about 100 advisor groups. So the liquidity pool is huge as these brokers come on board. The conversations I'm having with these brokers is relatively easy at the moment because the proposition's really strong. We've got the structure in place, we've got Iris Trader. We've got if they're not an Iris shop, they can connect through a Fix API. So we're not just beholden to Iris, we can also do Fix. So it makes it easier for the brokers to connect. We've got market data with 2 of the biggest names, Reuters and Bloomberg. And then finally, as I've been saying, with TAS coming on board, creating that straight-through process, the conversations with these brokers and the existing brokers is much easier because it fits their business model. So there's a huge opportunity, but whilst we can do all this work, we also need, to a degree, a bit of commercial pressure on these brokers to see the investor demand, the listing demand as well, because that helps the conversation with them to get it prioritised and bring it to the front. So that's it from me for now. I'll hand back to Anne to talk through some of the financials, and we'll do Q&A at the end. Thank you.
Really is a bit of a hybrid, isn't it, between operational business model and then your standard investment pitch. But it's absolutely worth touching on this because the exchange industry is a fascinating industry, right? It is quite a small group of players, but it is an incredibly profitable industry. Like most infrastructure or platform businesses, once you cover your costs, your fixed costs, then your revenue goes straight through to the bottom line. So I thought it was just quite proud of myself doing a bubble chart, when pulling it together. So worth just putting some other exchanges, international exchanges up on the board to get some perspective here. So here's NSX and here's our potential, right? So you look at NZX there, NZX, a market cap of 260 million or thereabouts, and along this axis here you can see they've got around 150 listings in their business. Their EBITDA margin, though, is still over 40%. Move through the other examples there. Obviously, the big gorilla in the room there is NICE, ICE. Now, obviously, it's a derivatives equities combination, so they're not exact direct comparable, but you can see there the huge valuation on a business like that and the margins which they're operating in. But again, looking at the listing numbers, you're talking about 2,000 companies. You know, we've identified how big the pool is in terms of sub 50 mil market cap company, 1,200 thereabouts, putting NSX around here. So at the end of the day, look at ASX, biggest margin, biggest margin of all. 78%, 76% EBITDA margin, fantastic business, ripe for competition. How does that play out from a revenue perspective? Somebody quite cleverly asked, well, okay, having said that IPOs or listings is the revenue driver in this business, what does it actually look like? What does it look like here at around 75 listings, which is where we'll be, I expect, by the end of the financial year in terms of our revenue model. But if we click that up to, say, 300 listings, assuming a 20 mil market cap on listing and assuming a 35 mil market cap for an annual fee, i.e. what we have currently, translates to $17 million in revenue. So it's a pretty straightforward business that we run. As I said, the levers are in terms of really listings, IPOs, so it creates a pretty good opportunity. It's all about getting listed. I guess over the last 12 months, a number of times, people have said to me, it's not if, but when in relation to NSX. But if they were to say that to me today, the when is now. Now is the time to be part of NSX, to invest in NSX, to be part of defining what the equity capital markets in Australia look like tomorrow and sharing in the success of NSX.